Good evening, traders and investors. Will back here with another one, coming to you with a Thursday market recap. Hopefully you guys had a very good day in the markets today. And in today's action, the S&P, the Qs, and most of your market was green again. And this time, we did get some good performance by big tech. However, we got a little bit of a fade in the middle of the day. We know that this morning opened up with a beautiful gap up open after the TSMC earnings, which lifted a lot of semiconductor companies higher. At the peak of this morning, the SPY was up about 0.7, and then we had a slow fade, a bit of an algo-driven sell-off in the later part of the afternoon. You can see that best on the S&P and even on the QQQs, right? We gapped up in a very nice fashion, 1.25%, and they maintained those gains right up until about the 2 p.m. mark when, once again, as I said, had a little bit of a gap fill attempt here, possibly by some algorithms. Now, unfortunately, big tech did not get the most amount of love towards the end of the day. When we opened this morning, this entire list, the big tech list, was all green. And then all throughout the day, we started losing companies left, right, and center. Apple with a bit of a pullback. AMD was up 6% for a majority of the day. And then boom, the algo struck, right? You can clearly see that this is not very natural selling, right? So a little bit of profit taking possibly by the algos. And even companies like Amazon that were up 1.5%, they gave back 1%. Google as well went from green to red all throughout the day. A few names stayed green, but Microsoft as well opened the morning very nicely and then faded all throughout the day. That's almost a 2% top to bottom decline, and so on, so forth as we move throughout this list. All of these were green and unfortunately ended the day red. However, the market breadth today was a very bright point again. Many more companies participating to the upside than to the downside. Taking a look at your percentage of stocks above their 20-day EMA, another climb, very good for the market breadth. 70% of all stocks now above their 20-day moving average, very healthy. Percentage of stocks above their 50-day EMA, 69.84. Let's just call it 70% as well, reaching some of the highs of last summer. And percentage of stocks above their 200-day EMA, eclipsing all of the levels from the entire part of last year, right? Or rather the entire year. 65% of all stocks above their 200-day EMA. So although the S&P off of such magnificent market breadth is doing so without the Magnificent Seven, it does show that internally the market is indeed improving. And we spent a lot of time in yesterday's video talking about the rotation into the 493, right? Basically the entire market except kind of for big tech. And you can see that on the heat map today, although some semiconductors were lifted substantially higher because of those TSMC earnings. Still some laggards here on the big tech names, and overall, though, a very good day of broad market performance. So in today's video, guys, we're going to do a few key things together. Number one, we're going to go over some news events that I think would be crucial to our analysis of the markets. Thereafter, we'll go through a few company earnings. We know that there was a lot of earnings today. As a matter of fact, we had TSMC, and then you had some banks, Morgan Stanley, Goldman Sachs, and BlackRock. So we'll be spending a lot of time on TSMC today because what they released were absolutely insane numbers today. So we'll spend a bit of time on this one and then briefly glance over Morgan Stanley, Goldman Sachs, and BlackRock to wrap up a majority of the bank earnings this week that were all fairly good. After we're done those earnings, of course, we will get into some charts and do technical analysis on the SPY, the Qs, and check on our minor sectors for that rotation as well. After we're done that, we'll go into our big tech names and once again derive which of these names are well positioned into their earnings and which of these names are still in attractive buying locations. As we know, they haven't really been able to hold much of an uptrend recently, have they? So we'll take a look at this list again and derive some potential targets into earnings. And at the very end of the video, we will once again talk about everybody's favorite section, the biggest gainers and losers of the day, of which there were many names, 5, 6, 7, 8, 9% to the downside, and then several names as well, 5, 6, 7, 8, 12% to the upside. So we'll be going over a few of those. Which one of these, which several of these plays rather are some of my favorite bets in the market right now. And that's going to be it for today. So it should be a very fun and action-packed video as per usual. Let's get into it, shall we? So the S&P up 0.27, but was up much higher today. And the Qs up 0.36, both up much higher today. Glancing over the heat map again, you'll see mixed landscape in terms of big tech, right? Amazon, Meta, okay, but they were up much higher throughout the day. NVIDIA was up 3.5% at one point today before giving back a lot of those gains. And the same can be said about many semiconductors. They started off really strong and then slow fade throughout the day. Some names that did really strong today were the semiconductor equipment players such as LRCX, AMAT, KLAC, and also a company that is not in there, ASML printing the highs again. It was such a good buy down here. And we spent a good portion of 2024 and even early 2025 saying that this was like my favorite buy in the entire market for large cap, large monopoly companies. And now it just continues to deliver those gains. Substantial day for them overall. Healthcare a little bit mixed due to Eli Lilly's underperformance today, and the bottom half of the market still a very bright point. Staples doing well today, industrials, energy, real estate, utilities, all the bottom half of the market having a pretty decent day overall. We did have some recoveries in some of the banks and some of the financial sectors that were a bit soft to start off the week, right? Moving on to the one-day relative, you'll see that even better. A large portion of the market was indeed higher, but to the downside, healthcare, energy, and communication services. Energy has been on an absolute tear the past week and a half. A little bit of a breather day today. On the 1 week relative, you can see where we stand. Most of the market is indeed green as we continue to broaden out. The only ones that are still red, financials, healthcare with today's pullback, consumer cyclicals, which largely is due to Amazon and Tesla's pullbacks overall, and to wrap it all off, communication services, which is largely Google and Meta. Especially Meta has been kind of weighing down that entire sector as they've been just coming straight down over the course of the past 1 week, as you can see from this little move right there. So fairly broad market, but still some large cap tech names underperforming. That being said, we are moving further and further into the greed category as the breadth continues to expand. Now a read of 62. Very decent overall performance right there. So before we get into more technical analysis, guys, let us go over a few key pieces of news, which gives us some insights as to what we maybe should be investing in for the near or medium term future. Number one right here, Tesla coming in with some news yesterday afternoon, which I think I covered on the video, but I'm not too sure. But just to reiterate, guys, very cool lithium refining plant, right? Very strong movement here by Tesla in order to obviously serve their battery production purposes and also magnet production purposes too. So very cool refinery here put in place by Tesla. Very nice video. Suggest that you guys watch this one. Very clean operation as well. And obviously everything Elon does, very efficient operation as well. So that was a very big piece of news. Just goes to show, guys, that a lot of metals and minerals will be very popular with the electrification of many different industries and the massive energy requirements for all of those robotics endeavors into the future as well. Moving on a little bit further here, Amazon is turning an Arizona mine that last year became the first new source of US copper in more than a decade to meet its data centers' ravenous appetite for the industrial metal. So Amazon is buying America's first new copper output in more than a decade. This is substantial, guys. And we've been talking about this over the past 2-3 weeks, the broadening out of the metals trade overall, right? And critical minerals too, especially those used either for semiconductors or data centers, and especially those used for energy purposes. Think of uranium, but now also think of copper, and as we just saw in the previous video, lithium as well. Those are three things that a few people are talking about. While everybody else is focused on gold and silver, you may want to broaden out your horizons to copper, lithium, and especially uranium for those juicy power requirements. This is a very big piece of news that Amazon put out over the course of the day today. Moving on a little bit further here, talking about those energy requirements for those data centers, not only in the United States, but all across the world, but namely in the United States. Look at this, guys, 1,000 terawatt hours in 2030. So they really need as much power as they can get, which is why you should be focusing on the entire supply chain, right? Whether it's utilities companies or the actual metals and minerals required to produce these energies or these products to begin with, the entire supply chain is up for grabs, and we could stand to make a lot of money playing these as we are still early in this entire cycle. As you can clearly see, that energy consumption requirement extends far beyond only this year or next year, well into the next 5-10 years, in my opinion. Moving on a little bit further here, this is Goldman Sachs. Goldman Sachs revised the demand forecast incrementally higher for U3O8, aka uranium. So here is the revised demand. The previous demand is this red little line right here. And here you can see the supply, right? So the supply of uranium not keeping up. This is exactly like copper overall, right? So pay attention to uranium and copper outputs moving in the future. There are several ways to play the nuclear trade overall. You can play the actual power producers, right? Like Constellation Energy, things of that nature, or perhaps something like a Vistra. in terms of just the raw utility output, or you can go up the supply chain and possibly play different styles of plays. You can actually play spot uranium, which got a huge bid over the past 2 days. This is SRUUF. It is Sprot's ETF. It measures the physical price of uranium overall. This could be very interesting, guys. Obviously, right? Inverse head and shoulders right there. That's pretty massive. But with that chart, it should show you guys there's just not enough supply. And when you know there's not enough supply, what do you think happens to the price, right? We'll just look at gold and silver recently, yeah? Moving on a little bit further here. Well, you got some numbers on the K-shaped economy, guys, right? So what's happening here is the further reduction of the bottom 80% buying power, or rather the share of US consumer spending by income percentile, which is why the president has been making so many pushes towards affordability, especially in this midterm election year. You can see here that the top 10% of income earners in the United States represent almost 50% of all spending, whereas the bottom 80%, well, they only represent, at this point in time, about 37%, and that's been getting progressively worse since 2010. So obviously, everybody knows the wealth is consolidating towards the top, but this chart can be construed in many different fashions. You can complain about it, or you can understand what it has in terms of an impact on the market, right? It just means that since we don't have the bottom 80% of consumers that much in terms of purchasing power anymore, right? Well, you really got to keep the top 10% happy. And how do you do that? You got to keep asset prices high, which is why the president will probably do everything in his power, at least during his presidential term, to keep the markets as bullish as possible. That could be your outlook. That is what you would call the Trump put, the same as we have the Fed put when the Fed is cutting interest rates and ending quantitative tightening. That's a Fed put, right? Basically an injection of indirect liquidity into the markets. Well, this right here is going to be your Trump put. He knows that if you lose the market, you lose the top 10%, they'll stop spending, and then you lose the economy overall. So keep that in mind. You have two puts in play for this year so far, the Trump put and the Powell put as well. Moving on a little bit further here. Well, this is an interesting one as well. For those of you interested in playing the China trade, look at the trade surplus, guys. Trade surplus hitting records right now in China. Very, very strong right there. Exports jumping 5.5% to 3.8 trillion, while imports remain steady at 2.6. Very, very strong right here, guys. Keeping in mind, right? If you're looking to play China, this is the prowess of China. It is their manufacturing output. So if you're looking for the boom or the recovery trade in China, because we know that for a very long time now, the Chinese trade has been somewhat muted. You can take a look at KWeb, or you can take a look at something like FXI, let's say, large cap China, and it's only back somehow to levels that we previously got in 2020 or 2021. So if you're looking for the progressive recovery of the Chinese economy, it all starts right here with the widening out of this manufacturing output gap, right? So very strong numbers put out of China today. Moving on a little bit further here, guys, productivity gains. Everybody talks about productivity gains. I found this to be an interesting statistic today. Recent productivity gains stem from more than just AI. The pandemic seems to have forced industries to be more efficient with what they have. This chart shows how much productivity in the food services industry surged during the pandemic and stayed high. Very interesting here that the food companies are doing essentially more with less. Shout out to Chipotle, who has uneven portions, but that's not really the case overall for the majority of the food and beverage landscape overall. Some of my favorite companies in that industry are still companies like McDonald's, legendary company, tons of pricing power, real estate business at the same time. But I found this to be a very interesting statistic to bring to you guys. Moving on a little bit further here. Now, this was the biggest piece of news on the day. It came out at about 2 p.m. And that's roughly when the market started dropping, but it shouldn't have dropped the markets. This is actually very positive for the markets. Big trade negotiations between the United States and Taiwan, a new trade deal. Tariffs going from 20% to 15%. However, more deal arrangements from Taiwan, including at least $250 billion in new Taiwan tech investments, plus $250 billion in credit guarantees. And because of that, the US obviously putting a 15% cap on reciprocal tariffs towards Taiwan. Very, very solid. And overall, as we now are speaking about Taiwan and these renewed trade deals, which were very bullish for the overall market, and especially a company like TSMC, let us now talk about TMC's earnings, because we're now done the news segment, ended it on the Taiwan news. So let's talk about TSMC's earnings really quickly, shall we? So TSMC on the day up 4.44%. They were up as much as about 6.5 at one point today, before retracing a little bit throughout the afternoon, as most of the some of the tech names did overall. But excessively strong earnings, guys. Wait until you see these numbers. They were absolutely staggering. Beat on EPS by 6.55%, beat on revenue by 0.34%, but that wasn't the highlight. The highlight was in the ridiculous guidance. Take a look at some of the numbers right here. Here are some of the easy numbers from TSMC. Revenue up 25% year over year. 3 nanometer revenue, 35% year over year, which is a lot of their high performance compute segment, right? Operating income, 38% year over year. Look at these operating margins curling up higher and higher and higher. EPS, 40% year over year gains. Fantastic numbers by TSMC overall. And we did get some Q1 guidance too. Q1 sales estimate, yeah, they beat by $2 billion. 35.2 versus the estimate of 33.2. Q1 gross margins, 64% guidance versus 60% estimate. That's massive. And Q1 EBIT, earnings before interest and taxes, 55% versus the 50% guide. So this is not only a massive demand story for their product, but it's a productivity story as well, as they continue to increase margins overall, sequentially, quarter over quarter and year over year. Moving on to some more numbers here. I figured I should give you guys some 2025 full year recaps, because they just ended their entire fiscal year 2025, right? Revenues for the year, 36% year over year, very strong. Ended the year with 59.9% gross margins, which was a almost 4% improvement versus 2024. Operating margins, same thing, 5% improvement right there. And net profit was absolutely massive, guys. They're almost running 50% net margins, 48.3 to be specific. Moving on a little bit further here, in terms of your 2026 overall outlook here, guys, 2026 revenue growth, close to 30%, very solid. Long-term gross margin guide, that was raised to 56% from 53%. And moving on a little bit further here, their long-term total revenue growth, this is very important, 25% compound annual growth rates, 2024 through 2029. The previous guidance 2 quarters ago was 20. They have now raised that number overall. And they did also say, I will remind you a few weeks ago, that they will be increasing prices by between 5 to 10% every year for the next 3 to 4 years, because they can, quite simply. Here we have a few quotes by the company right here. Supply versus demand, the capacity is very, very tight. They're looking at 2028 or 2029 to narrow the gap. Just to give you guys a sense of duration of how long this AI boom can possibly go into, right? 2028 to 2029 is when they might be able to narrow the gap. And that's just because they're building so many new fabs for all of that demand overall. So the AI trade, as CEO C.C. Wei said right here, AI is real. Not only real, it's starting to grow into our daily life. I'm also very nervous about it. We have to invest about $52 billion to $56 billion for the CapEx. If we didn't do it carefully, that would be a big disaster for TSMC. He spends a lot of time talking to my customers, and then customers is customers. I want to make sure that the demand is real, and they show me the evidence. Capacity is very tight. We work very hard to narrow the gap. 2028, 2029, as we said. He worries about the electricity in Taiwan first. The CFO saying our pricing will remain strategic, not opportunistic, referencing those price increases, not wanting to basically price gouge, right? The market right now, they're remaining strategic, but not opportunistic. When you're in a position like TSMC, you could jack up prices probably a whole lot more, and people are going to pay. And the bottleneck, the biggest constraint, is wafer supply. Just some key elements from that right there. In terms of market share dominance, it is very clear. Pure Foundry market share right now through 2025. Look, TSMC has actually increased its market share at a dominant 72% right now. That is versus competitors such as Samsung, SMIC, UMC, Global Foundries, and others. Staggering market share performance increases by TSMC. Moving into their actual earnings slides, you can see how good the margin improvements have been overall. Take a look at the margin improvements, guys. We're up to 54%, right? Everything. Gross. Compare this to prior quarters, 59. Compare the 54% operating margins to prior, 50.6, 49. Net profit margins, 48 versus prior 45 and 43% in the same quarter of 2024. Moving on a little bit further here, they continue to ramp their 3 nanometer technology and will be doing 2 nanometer technology soon. Very strong right there. In terms of their revenue by platform through Q4, we see that their high performance compute Data centers, of course, has grown, but smartphones are now coming back. The Internet of Things, 3%, automotive down a little bit. If you take a look at overall 2025, you can see a very nice broad landscape here. High performance compute was their best performing segment because of the data center requirements. Smartphone, Internet of Things, and automotive. Automotive was something that didn't do quite well in late 2023, early 2024, but 2025, automotive segment for TSMC is a big driver as well, and the company generating a ton of free cash flow. Moving on a little bit further here, TSM recently, we covered this, I believe, the other day, 2 days ago in our news segment. They spent $200 million to acquire 900 acres next to its existing Arizona campus to secure land for future expansion. The purchase supports TSMC's $165 billion US build-out plan that includes 6 fabs, advanced packaging facilities, and an R&D center. If you want to know what that looks like, save this chart to your files right here. Here is your production timeline for all of those factories. They're working on, well, they've just completed Arizona Fab number 2, production 2028. And then you can see they have Arizona Fabs 3 through 6, advanced packaging, and another fab that they newly committed to with that most recent piece of news. Here are your timelines for production overall, and here's what they will be making in each of these fabs as well. So save that one if you want to take a screenshot, do it right now. And moving on, lastly, guys, if you guys have never seen a TSMC factory, I thought this was really cool. So take a look at the TSMC factory and how it looks like inside, yeah? So it's largely all automated, which is absolutely ridiculous. So these little machines carry the wafers, okay, from different segments of the production line. Super cool robotics and extremely advanced factories by TSMC. This is why they're the best in the business, and it's arguably not even close. And where do they bring these little wafers to? Well, look where they bring them to. They're bringing them to these massive machines made by a company we referenced previously, which obviously is the advanced lithography machines from ASML. If you've never seen the lithography machines, they engrave the wafers, essentially, right? Which is a process that you're kind of seeing on the screen right now. These massive, look how massive this machine from ASML is, right? It's so massive. $400 million machines, super complex, uses light to engrave tiny little increments and circuits across the semiconductor wafers, and it looks something like this, the etching of it. Extremely precise work by ASML's machines. So obviously, more fabs for TSMC equals more machines for ASML, and you can pretty much guarantee that the roadmap for TSMC and both ASML are going to be very, very strong for the next few years. If you guys haven't seen these in operation, just to give you guys a sense of the scale and the automation that goes behind building some of these factories, and it's very nice that TSMC has committed to building $165 billion in Arizona, and with the most recent deal announced today, potentially linking another $250 billion, right, in terms of credit guarantees, and up to $250 from the $165 previously announced for building capacity. Very strong numbers by TSMC. Nice to see them build that all in Arizona. So in terms of TSMC, with all that bullishness, guys, is TSMC a buy up here? You guys know that this is one of my large positions in my long-term portfolio. I've held it for a number of years at this point. Started buying my first TSMC shares back in 2018, 2019. And any and all dips, I'm a big fan of adding to this position so long as the valuation makes sense. So let's talk about the valuation real quick. At 340 right now, they trade at a forward 26 forward price to earnings, which is not too bad. A 1.37 peg. I'm using a 19% EPS growth rate because I do believe that these expectations have not been revised with today's earnings numbers just yet. I tried to pull them from a few different sources. These have not been revised. I think they're a little bit light, especially in consideration with TSMC's pricing power right now and these price increases. I think EPS, instead of being mid-teens, I think it actually sits closer to 20. So I'm using a 20% EPS growth rate per year through 2028, which I think is very fair. As a result, we get a 1.4 peg or just under, and a 9 forward price to sales as well, with a 2.15% free cash flow yield. So TSMC, is it cheap right now? Well, it's not expensive, but I wouldn't necessarily say it's super cheap. Can we buy up here? Yes. Is it the best area to buy? Arguably, no. Some of the more interesting areas that we were talking about nibbling in were all the way back here. And obviously, the best location that I pounded the table on was during the big tariff sell-off down there. But now this area is gone. It's now up to 2.5x from that moment. If you're looking to start a position in TSMC, they have a great growth roadmap through 2028 and possibly beyond. They have a dominant market share position, tremendous net margins overall. Their growth is very clear. Arguably, semiconductors can be cyclical, but perhaps the business that is the least cyclical, well, there's two of them, and I own them both. The two semiconductor businesses that are arguably the least cyclical with the strongest moats and competitive advantages are TSMC and ASML, which is why they're the two largest semiconductor positions that I have in my own long-term portfolio. So is it a buy up here? It's breaking a few rules in terms of how high we are, right? But as a matter of fact, it is a buy, but keep in mind, there's always, always, always the geopolitical risk of China being able to take over Taiwan, which is why Taiwan's been, investing so heavily into North American fabs overall, but there is always that overhang. And you have to acknowledge that if you are in TSMC. So is this one a buy? It is a buy, not a very strong buy. It would be a better buy if we somehow come back to backtest this 300 area. I don't know if that's going to happen, but you're going to have a pretty decent market sell-off to get some of those prices back again. But definitely one of my favorite semiconductor companies out there. For me, at this point in time, it's more of a hold than it is a buy, but it is a slight nibble overall. So keep that in mind. That's everything I had for you guys for TSMC earnings. Now, let's move into a couple bank earnings, but I'll briefly be going over these. We're not going to do deep dives, just kind of flying through the numbers. All right, so first we're going to talk about BlackRock. Okay, so BlackRock, very strong day. You can see they were up 6% after the earnings. We talked about this one in our Discord group. I'm not sure if I referenced it on the YouTube channel in the last week, but I was saying, I do distinctly remember talking about this one, into November and December on the channel, just looking for a back test of the 12 EMA. This was part of the whole broadening out of financials, right? We talked about SPGI down here. We talked about Moody's Corporation down here. I distinctly remember pounding the table on Visa and MasterCard over the last few months down here as well. And we did reference BlackRock as being a quite interesting buy when we were looking for things outside of the banks, right? The legacy banks or the investment banks, because we know the banks had ran a ton so far, and BlackRock was a very beautiful opportunity to pick up in the $1,000 range. And here was why. Clearly, the volumes, right? So BlackRock posting their 2025 earnings, 9% organic base fee growth in 2025, record inflows in 2025 of almost $700 billion, record assets under management, $14 trillion in assets under management, a 19% revenue growth across their various products through 2025. Excessively strong earnings release by BlackRock today. Their numbers initially, 7.5% beat on EPS, 3.66% beat on revenue. When we're talking about very large companies, arguably with undeniable moats, BlackRock definitely has to be part of that discussion overall. Company's worth about $188 billion right now. It's not super expensive. They do generate very decent margins for the business type that they are. Mid-20s% in terms of net margin. Very fair in my opinion. And they are an extremely consistent company. You definitely know what you're getting with BlackRock. Every single year, they find a way to increase EPS. Well, it's just because of their dominant market position, right? They're a toll booth company. All they do is they just collect fees. And they sell research as well as a side hustle, and revenue. Just a very consistent business model. So whenever this one pulls back to the 12 EMA, I'm always a big fan of adding this one. Of course, it doesn't do well during big asset bear markets because people sell their holdings, less fees for them, right? However, during expansion phases, when this one really comes alive and you're currently witnessing a new expansion phase. So BlackRock for me is a bit of a nibble. It was a better buyback here. But if we do have this one, if you want my commentary, is it a hold? It is definitely a hold for the long term. Moving on, we got a few more key pieces of information here. First, we're going to touch upon Morgan Stanley. So Morgan Stanley having a really good day today, 5.78%, huge engulfing candle and continuation of this massive weekly uptrend, massive monthly move higher. A little bit stretched though on the monthly RSI. You can see they're very, very stretched right now. It's a tough buy all the way up here, but the numbers were fantastic, not taking that away from them. Net revenues, right? Q4, 10% year over year, EPS, 21% beat year over year, and no major increases in provisions for credit losses, right? Actually decreasing that overall number. Institutional securities was very solid here, 10% in equities trading, 47% in investment banking fees. Wealth management, very strong too, 13%. Very strong company, but a little bit too extended for my liking all the way up here. And the same can be said about Goldman Sachs. Both of these companies are holds. They're not really buys for me up here, not when we're so far away from a 12-month EMA and really blasting off here on the monthly RSI. Beautiful short-term uptrends, guys, but just a little bit too extended. There always has to be a cutoff point for when you're no longer willing to buy something, right? And the cutoff point for me on Goldman Sachs is indeed here. In spite of them posting very strong earnings, here's the earnings from Goldman Sachs, 17% beat on revenue, slight little miss here on their earnings, on their revenue multiple, excuse me. So take a look right here. Here are some of the exact same numbers that we just talked about, right? The big benefit was that massive beat on EPS overall for Goldman Sachs. So if you take a look right here at their global banking and markets, 22% year over year, equities trading 25, right? Advisory fees 41% overall. So very, very, very solid, everything considered, right? And just this is going to be the market perhaps for some of these investment banks or the banks in general, because we know now that a few key things, a few key themes are going to be happening. And this is this chart right here, the annual investment banking fees. Now here are, excuse me, I'll move myself over to the side so you can see the legend. JP Morgan is your dark purple, and then we get lighter, Goldman Sachs, Morgan Stanley, Citigroup, and then Wells Fargo. Obviously, JP Morgan, Goldman, and Morgan Stanley are your three largest ones, and you can see those investment banking fees have been curling higher since the lows of 2023 all across the board, right? That's been the story of the most recent few quarters. And moving on a little bit further here, number of US IPOs has not even been close to 2021. 2025, we had 61 IPOs. 2026 is also supposed to be a good year for IPOs. And you guys know, when we talk about IPOs, we got to talk about the investment banking fees and mergers and acquisition fees, or just the IPO fees overall, all things under investment banking fees. That being said, this should be a good year for M&A, should be a good year for IPOs, and you do have some very large IPOs, guys, right? These are the US M&A transactions in 2025. You can see here $1.9 trillion. 2026 should be a very strong year, so you can expect better numbers out of the banks, even the investment banks too. It's just, you got to be mindful where you're buying them, right? You're paying very, very, very full prices for these investment banks at the current status right now, which is why I'm not a fan of buying these. I'm playing other financials, but not these. And look at the IPOs, guys, just the size of the IPOs this year. You got SpaceX, $1 trillion plus, OpenAI, 800 to about $1 trillion, right? ByteDance, which is the owner of TikTok, right? That might be a big IPO in 2026. You got Anthropic, second half of 2026 as well. Google and Amazon own decent portions of Anthropic's business. Databricks, Stripe, Revolut, and possibly Canva, all expected to come out in 2026. So it should be a good year for the investment banks, but we always got to be mindful what we're paying for things and how hot things are running, right? As of right now, not the biggest fan, but pay attention to the retracements, right? If you get a correction period in time and you see some of these investment banks drop towards somewhere close to their monthly 12 EMAs, usually these are kind of no-brainer buys. Just pay attention to them. But right now, you're paying very much full price for these institutions. So I am not a fan of positioning all the way up here, but they do remain holds if we're already in. For those of you that already have these, nothing wrong with these companies. And as I said, right, the M&A this year, the banking fees, the IPOs, the size of the IPOs that are coming, all good macro catalysts for these investment institutions. So that's everything for your earnings recaps today. The last part of the banks and also Taiwan Semiconductor. Hopefully you guys enjoyed. Now, let's jump into some charts, shall we? All right, so going through these charts one by one, starting off with the S&P. The S&P is still looking very good, right? The new higher lows are set at the lows of yesterday. If you take those out, that's the new line in the sand. Daily uptrend is very nice right now. Higher lows. If you take that low out, well, it's the start of a little bit of weekly consolidation. Good thing, though, the market's very broad right now, so the bias is still definitely bullish, but just some levels to pay attention to. 684, then about 680 is your support zone, and also a very nice weekly backtest location. The monthly, no problems right here. Market breadth is still quite substantial, and we spent a good portion of the last week or so talking about the macro catalysts and why it's very difficult to be bearish into this year overall, but it is a midterm year and there will be some additional volatility. And keep in mind, you know, a 5-10% correction in any given calendar year is almost a guarantee. I don't have it saved, but maybe I can go through some of my bookmarks right here just to show you guys. I did save it. Here you go, right? There will be another drawdown in 2026, just like there was every year before it. So it's coming. Here are your drawdowns per year. Every single year, we get something. Most often, it's usually 5 to 10. So if we're waiting with a lot of cash, maybe we kind of wait until that, pool a little bit of cash. You know, the market's been running hot. There are some key themes to watch out for this year, which we spent the last week describing. And we will keep describing every single video: energy, robotics, defense, and second order plays for the data centers overall, right? Last year was all about big tech and first order plays such as the Neo Clouds, right? The Oracles of the world NBIS, IRN, CoreWeave, things of that nature, and other connectivity plays such as ANET, Credo, many others that we've spent some time talking about. But this year, look into some of the efficiency gains from some of the smaller software players, perhaps, things of that nature, and just the second order effects from AI. Moving on to QQQs right now. QQQs, very interesting move today, right? Obviously, we had the big gap up open and a bit of the gap fill, not full gap fill, but a little bit of it, right? We'll see maybe if we can carry down into the early morning and fully fill it overall, but we're not really losing structure right here, right? It is still, this is very awkward, right? Tightening wedge that we tried to break out of yesterday. I say tightening wedge because it actually is a tightening wedge, right? So we're breaking out, we broke out of the top of it, but unable to get the follow through because we're missing so much of big tech, right? It's just not trending. And I do think that big tech is largely going to be somewhat muted maybe before their earnings. And then when they have their earnings, just like TSMC did today, people will probably remember, oh, that's why they're big tech, because they post ridiculously strong earnings, right? So I do think most of the big moves in the Qs can possibly come after earnings, and those will be probably in the next 2 weeks, right? End of January, early February overall. Until that time, we'll pay close attention to the Qs. Higher lows are set right there. It is a awkward uptrend, but not an uptrend with that much momentum. We're just kind of holding ground right here. But pay attention, guys. If you lose this one, you're going right back down to support 612 down to 605. The weekly has just been this awkward tightening range as we've been describing, right? So we're waiting for the breakout, and the monthly just consolidating a little bit sideways as we're missing a lot of the big tech players, but no big red flags. That's for sure, right? Moving on to financials right now. Financials trying their best to hold it up today, but still a little bit soft. You're missing Visa, you're missing MasterCard overall, and some of the banks, you know, they didn't have, I mean, they had good earnings, but the market chose to sell them off regardless. And we covered why in the past 2 days when we recapped a lot of these banks. So you're missing a few of the banking names, obviously, and some of the financials names. Bit of consolidation was a daily uptrend. You lost it now. Now the bulls have to get it back. But we're bouncing nicely into support right now. 54.33, down about 53.50. That's just these guys from prior. I mean, you can make this box a little bit bigger if you really want to. You can encompass a few of these tops right there. But so long as you guys understand what we're trying to do, right? On the weekly, just a big old breakout retest, yeah, and possibly looking for the run. But for the run, you will need to recapture some of the banking losses, and especially some of the losses on some of the bigger players, such as Visa, such as MasterCard. We will see if that 10% interest rate cap will actually go through or not. Obviously, it's been a big talking point this week, and we've covered it many, many times on the channel over the course of the last 4 days. Just to reiterate, right? So you will need that segment of financials, but the bulls not looking too bad. Natural consolidation after a nice upswing, and on the monthly too, right? Even if we move down a little bit more, just looking for a monthly higher low. Financials have very strong macro tailwinds into this year. You can think about the rate cuts. You can think about the end of quantitative tightening and the beginning of quantitative easing, right? $40 billion by the Fed at the end of every single month. So, and also a lot of deregulation purposes too, and lower tax requirements for individuals and corporations. So all things that may help bolster the amount of transaction volume that run through banks overall. Moving on to healthcare right now. Healthcare down 0.57. A lot of that was due to Eli Lilly. Eli Lilly was down pretty big today, like 4% overall. So this one's still pending the next leg higher. As you can see, we derived this as previous resistance, current support. So we're just looking to extend this daily uptrend a little bit. But even if we lose this area, guys, right? Even if you lose this and go into a bit of a bigger downswing here and even a weekly downswing, you're just looking maybe for a tightening range, something exactly like the QQQs, right? It's still a bullish pattern, but it's just we're not getting the lift yet from healthcare. But overall, when in doubt, zoom out. Higher time frames look gorgeous. Monthly downtrend, beautiful engulfing move. Even if you come back here a couple percentage points, at the end of the day, you're just looking for a nice back test. 150 down to, let's say, 145. This little pocket will be a phenomenal buying area if you're looking to play the entire ETF. On to semiconductors right now. Semiconductors best performing index of the day because of the TSMC earnings, but we know here that they kind of just gapped up and then it was just a slow fade all throughout the rest of the day. Gap left behind right now. So decent price action, clear daily uptrend, right? Higher low set and just looking for a new higher low. Pay attention. Line in the sand has gotten stepped up to 383.63 at this point in time. In the event that you lose this, I wouldn't be panicking. If you go into the daily downtrend and consolidation, no problem at all. When in doubt, zoom out. What are we going for here, right? Looking for the weekly higher low. At this point, probably back test of this location. 370s, right? 372, 370 right there. 12 EMA, maybe for an extra leg higher. And on the monthly time frame, well, we're just gone at this point. They consolidated, right? Sideways for a couple months, and now we're gone. Still a lot of distance between us and the 12 EMA. So SMH, I'm not playing SMH as an ETF. I'm kind of playing individual names that haven't ran so much. Like, I'm not buying ASML up here. I'm not buying Micron up here, right? Even though these would be holds for me, I'm not buying them up here. Any new buys right now, I'm playing the names that haven't really done much. I'm playing NVIDIA, I'm playing AMD, and I'm also playing names right now like Marvell as well, which is super solid, looking for the monthly breakouts. I'm playing the names that are left behind. If you guys want to play the names that have all the momentum and want to buy them at the highs and take your chances with them, it's up to you. That's not my style, but as we know, right, there's many ways to trade the market. Wishing you guys the best of luck and all the success in the world, of course. Moving on to the IWM Russell right now, the Russell continues to be very, very solid. Further increase, 0.9% today. A lot of room between us and the line in the sand at 246. Any drop will just be looking for a new higher low for further trend continuation. Tons of space on the daily, tons of space on the weekly. Beautiful weekly uptrend. I'm not playing the Russell as an ETF. I'm playing individual small cap names. There's nothing wrong with playing the ETF. I'm just telling you guys what I'm doing personally. The Russell currently embarking in the breakout phase. We know that they're not that much higher than 2021 and the highs of 2024. The Russell could have a nice cyclical boom right now because we know the macro conditions do support it, meaning a boom that lasts more than maybe just this year, 2026, 2027, if the macro conditions are good and the market holds up. Growth stocks, smaller cap stocks, mid cap stocks, probably a decent place to be as the market continues to broaden out overall. And then the rest of the market, which we've talked about all week, still doing good, right? XLP looking for the cyclical breakout. If you guys don't know what I'm talking about, I spent a lot of time in yesterday's video and the day before. I labeled in the video descriptions, right? When I cover the indexes and yesterday's sector rotation, the introduction, very important. I also cover this last Monday's video when the title of the video is 2026 Key Themes. The theme was the broadening out of the market, meaning you don't have to only be in the big tech safety trade anymore. You can find some decent alpha and some decent gains in the broadening out aspect of the market, which is everything else. And consumer staples, although not that sexy, could prove to have some very nice tailwinds into this year as well. Same thing could be said about consumer retail, XRT looking very strong right there. Utilities also going for the 12 EMA backtest. You guys know I'm a big fan of playing the independent power producers, especially the ones exposed most of the data centers. Look at this breakout here on Vistra, right? Reclaiming all the daily moving averages. We haven't had that since October. Big daily uptrend breakout, reacting perfectly from our support range that we've been talking about the last 2 months. Weekly MACD looking good for the momentum switch, right? So pay attention to Vistra, guys. I've been building a position here on Vistra. Monthly consolidation into the 12. Higher lows are set, and they're looking for the expansion. They do a little bit of everything: natural gas, nuclear, solar, and battery storage, but it's not limited to that. You can take a look at Constellation Energy, largely the same pattern, higher low, looking for the expansion. Obviously, this is nuclear. We can play things like Duke Energy, same patterns all across the board right here. You can play other ones. I mean, there's so many that we can possibly talk about in utilities overall. We can play Next Era Energy, also looking for the breakout, right? Not too bad. All of these guys can be very interesting. This one is a just massive. I mean, once you see it, you can't forget it, right? Cup and handle, same time, shorter term, monthly. Well, it's not short term. It's a monthly chart, right? So when you have monthly patterns like this, you kind of got to look out for them. So there's a lot of very interesting plays. So pay attention to them. The independent power producers, especially, yeah. And then real estate, the REITs could also be an attractive location as yields continue to come down and deal making continues to move forward in commercial real estate and just residential as well. You can have some nice opportunities in either the REITs as they offer nice dividends. The one that I have obviously is Vici. We've talked about it many times on the channel. Decent multi-year support, pays like a over 6.4 to be specific percent dividend right now. Very interesting, but also the mortgages, you know, whether you're looking at Rocket Mortgage, super solid breakout. We talked about it ad nauseum back here. So maybe you guys were able to position. If you weren't, there are a few other mortgage bets out there. And lastly, energy looking good. This ETF is largely oil and gas. We've talked about many different sectors, such as the nuclear sector. You can play an ETF such as NUKZ or whichever one you want. This is the one that I usually play. Energy, oil, gas, especially some of the midstream pipelines for the data centers. Very interesting into this year as we know the energy requirements. It's an energy boom cycle right now, you know, and energy XLE, even oil and gas, right? This is like a 3-year almost downtrending momentum MACD, and we've just now crossed. I mean, you know, you probably don't see it right now. I got to maybe zoom it in a little bit. We've just now crossed. So maybe a shift in momentum here to the bulls, looking for some expansion on XLE. All very good opportunities in the markets. There's something for, I keep saying this since the beginning of the year and the end of last year, right? There is something for everybody in this market, right? Whether you want to play minerals and metals, whether you want to play energy, whether you want to play value and dividend plays with the broadening out of the market, whether you want to play consumer retail, which has been abysmal for the last few years, right? Whether you still want to play large cap tech, that is still a very powerful trade. Whether you want to play semiconductors, there's tons of opportunities everywhere in the markets. Robotics, defense corporations with the 1.5 new potential spending in 1.5 trillion in new spending in 2027. There's literally something for everybody. So depending what, and even in healthcare, right? Some of you guys have specialties or specialize in pharmaceuticals or things of that nature, right? Or medical devices. There's so many opportunities across the market for whatever you have an edge in. So pay attention to the broadening out of the market, because in the last 2 years, we know that there was a lot of focus on just AI and pure large cap tech. And if you weren't in this aspect of the market, well, you just weren't really getting many gains, right? But now the market's broadening out. There are many opportunities all across the board if you know where to look, which is what I always say, right? So keep that in mind. Moving on further to our metals analysis right now. So gold and silver, a little bit of a pullback here today. The bulls still largely in control though, so looking for a higher low. Pay attention, guys. The gold bulls love this daily 12 EMA. So pay attention to it when you know you're in a daily uptrending sequence right now. If you get a little bit of a back test and the price action is favorable, well, maybe we can build some more swing trade longs here. 45.25 stop loss goes there, and then you're looking for the expansion, 48, 49, etc. Decent risk to reward. Daily bulls in full control, weekly bulls in full control too. Gorgeous new weekly uptrend as well. Well, we never really lost it, right? It's just they were a little bit slow to get this second leg going. Beautiful weekly uptrend, but don't look at the monthly. You might get a little bit of vertigo here. Monthly is super overbought. So we should be trading these with established stop losses, right? Or if we're in from prior and we were looking to just trade this, clipping out profits along the way could be a decent proposition too. Keep that in mind. Same thing for silver, right? Silver had a big decline yesterday in the overnight session. We like to call that a overnight liquidation break, right? That being said, they were able to recapture throughout the trading session today. So it's giving you tradable locations for stop losses, right? If we're looking for the re-expansion of the hourly uptrend, right? They lose the hourly uptrend. If we're day trading this one, right? Lose the hourly uptrend. You wait until they get it back. And then you can reposition on these pullbacks, right? This little pullback right here, stop loss goes there. Then we trade psychological levels, 95, $100 range type of stuff, right? That's if you're day trading, right? I don't do that much day trading for you guys on the channel, but I know that there's a lot of people that may do it. On the daily, if you're looking for the larger swings, same thing. What EMA have the bulls respected for a better part of the last 3-4 months at this point? What's the daily 12, right? So wait for pullbacks there. When you get the pullback, you get a nice tradable stop loss below 74. And if it does come down another 83, you got some upside into the next line of swing trades, which would be the $100 psychological target. That's if they don't clip into it right away. It just depends what type of trader you are. This is why I'm going through all the time frames. The weekly is super bullish, but you start going with the weekly, you start getting vertigo, right? Super overbought conditions on the monthly, super overbought conditions as well. So if we're in from large swing trades here, not a bad opportunity to be clipping out in terms of some profits progressively, right? If you guys are day trading, you guys don't care. You guys have short-term stop losses. But for all of you that are sitting on tremendous silver gains, right? Well, starting to clip out profits when you're at literally generational. And I say generational because it's almost been a generation, right? You're at levels that you haven't seen since the 1980s in terms of MACD. You know what I mean? Or in terms of RSI, excuse me. So it's very overbought. I understand the demand is there. The supply is very tight right now, right? You guys know all this stuff. We covered it many times on the channel, but nobody ever went broke taking profits. And then you can just clip out and just ride the rest into psychological targets. If you think it's going to 100, 110, 120, 130, great. But at least you have to have an exit plan and not just hold the full bag, right? Because, when this reverses, sometimes it can reverse a little bit hard and reset the timelines or reset the time frames, because eventually everything goes into monthly consolidation eventually. It doesn't mean it can't re-expand, but, to say that every single month this entire year, silver is just going to be straight up, probably somewhat, improbable. Not impossible, but somewhat improbable, right? Moving on to some of the crypto names today. So crypto got hit a little bit today on Bitcoin and Ethereum, and you can even see in some of the names most exposed to crypto, Circle was down a lot, Robinhood was down a lot, Coinbase was down a lot, BMNR down a lot, obviously, right? why was crypto down today? It's because of the Clarity Act that's moving through Congress right now. I mean, if we kind of take a look here and you just type it in, you guys will see exactly what I mean. So I was covering this with my Discord members over the course of the afternoon as to why it was down. So Brian Armstrong, so the Clarity Act essentially is something that's passing through Congress to give crypto a little bit more regulation. There's only one problem with it. And Brian Armstrong, the CEO of Coinbase, he's actually opposing the Clarity Act, unfortunately, right? So essentially, the reason that it was bearish for crypto today is because the mandates in this proposed bill are that you can't generate any interest on stable coins. And it also makes requirements for obtaining crypto accounts and stablecoin accounts and things like that. It makes you go through KYC arrangements, know your client, right? Which is kind of like against the whole decentralized finance argument. Some people are criticizing the Clarity Act. Brian Armstrong is as well, saying, well, the banks don't want you to be able to generate interest from stable coins because that's their market and they want to protect it. So it's traditional finance versus crypto. And now, you know, they want to enable legislation with crypto, but they want to do it on their own terms and not lose business for it. So anyways, it was just a whole bunch of confusion in the crypto markets today, which is why crypto kind of went down a little bit and why the crypto specific names, stocks went down as well. That being said, you know, crypto always is volatile, always a volatile asset, right? Daily uptrend is still in the full bull control right now. Any move lower, still looking for a higher low. Anything above 89, looking for a higher low for continued trend expansion. You need to close this weekly time frame above 94.8. Close this like that, beautiful. Weekly uptrend, weekly MACD is crossing right now, looking good. So you may have established the monthly low, but as I've been saying, right, this is such a steep pullback. It's an 80% retracement. Usually when you cut that deep, the full V shape into highs is somewhat unlikely. Most often you get the two-step recovery process because the retracement is just too deep, right? You get a shallow retracement like this, it's easy to blast through, right? Even this one was like a 50% retracement. You can still V-shape. 80% retracement, you're going to need a lot of volume and a lot of bullishness to V-shape this one. So long-term positions on Bitcoin, yes, and even short-term trades. I mean, you got to trade this one with a stop loss. You get the pullback here into the EMAs, into this massive support range. You got to play it with a stop loss because if they unwind you, well, you know, once again, you open up the door for the infamous possible rollover. Same thing on Ethereum as well, right? Ethereum, nice daily uptrend right now by the bulls. Any move down, looking for a higher low above 3,050, higher low for possible trend continuation. Targets to the upside, 37 up to 4,000 resistance range, right? Previous highs, previous support. This is your resistance pocket, looking good. Close a weekly above 34.25. That is an official weekly uptrend. Nice MACD curling over right now, and maybe the bottom of this monthly move, and maybe looking to push a little bit further on Ethereum as the market broadens out. We know that crypto was a disaster over the last 3-4 months. Maybe 2026 would be a bit better for them as the entire market and the risk on trades are now broadening out in terms of scope. That's everything for your overall market rundown. Hopefully you guys enjoyed. Now, let's spend about 10 minutes on big tech, then we'll do biggest gainers and losers, shall we? Okay, so big tech, which of these are good opportunities and where? Well, Apple is still in daily oversold conditions, still in the context of the daily downtrend, of course. Support stays planted below us, 255 down to 245, culmination with the 200-day EMA and the monthly 12 EMA. This one, we're just looking for a monthly cup and handle or the monthly good old breakout retest of the former highs. So pay attention to this area. This is the area that I will be exploring some swing trades. We might have to wait until earnings for Apple to actually do something. They should be having a very good Q4. I won't be adding a lot of size up here simply because the valuation is still somewhat extended for Apple, but they should be having a good Q4 and good 2026 as the release of their iPhone 17 and new product suites have been very good. So for me right now, I'm only selling some put options down here, but I'm not yet building any positions and I'm not adding to any long-term shares just yet. Moving on to AMD right now. AMD was up 6, but they gave back most of that. Look at this massive, just ridiculous algo move on AMD, right? It's clear algorithmic selling, guys. They're just riding, this is the 1-minute chart, right? They're just riding the 12 EMA down this entire time, yeah? So a bit of an unnatural move on AMD right there. That being said, did claim a level right here. Nice engulfing move. Got a lot of space right now to reset the trend if they want to move a bit lower before going higher. Got a lot of space right now. Anything above 200 looking for a higher low for possible further trend continuation. On the weekly, still no weekly breakout. It was weekly engulfing. We'll see how it closes the week tomorrow overall. Big options expiry tomorrow, so maybe it's in relation to that in terms of the algo selling that we saw towards the end of the day. The monthly time frame remains the clearest time frame of them all. If you're confused with the smaller ones, guys, it's just a monthly breakout and almost retest, right? They didn't quite make it down into the meat of the previous resistance support area with the 12 EMA, but they did test this little guy right there, which is your bottom of the candle structure around the 200 psychological that the bears were never able to really close below and claim fully. So AMD at 230, is it a buy right here? Well, indeed it is, because if you see, if I redo this valuation here at 230, sorry, I'm taking up a bit of your guys' time, but just to prove to you guys, the valuation is still very manageable. I won't do price to sale. Well, maybe I will. 230 by your, 230 by your 657 EPS. You're looking at 35 forward PE. If that seems a little bit steep to you, just remember they are growing EPS at 35% per year. I don't even need the calculator. That's a one peg, right? They're on a one peg, and price to sales should be quite attractive as well. You're talking about a $371 billion company that is going to do 371 by 45.20, right? So 371, let's go right here, excuse me. 371 by, what did I say? 45.20 by 45.20. You're looking at about an 8.2 price to sales, right? So everything is good here in terms of the valuation. It's still objectively cheap because the fundamental thesis hasn't changed on AMD, right? Big, huge revenue growth through 2028 and massive EPS expansion with profitability expansion as well. So AMD is still a decent add here, right? It was better previously, but we can't think like that, right? Let's say you just didn't see it back here when I built my position and here when I built my leap calls, and now you're wondering, is it still a good deal? It is objectively a still deal. You're still early on in the thesis, so keep that in mind. Moving on to Amazon right now. Amazon up 0.65, but still just doing the good old breakout retest of the great previous wall of resistance, which hopefully now is the great wall of support. Weekly, still weekly uptrend breakout. Amazon has earnings towards the end of the month as well, so keep that in mind. Is Amazon still a good buy here? Indeed, I think it is. Monthly, still consolidation, right? This is one massive 10% consolidation range, very close to the 12 EMA, right? You can tell that something is going on here. It's an accumulation zone, right? Big accumulation zone. And I think we're going to get a very big breakout into 2026 overall. Around 235, still an attractive valuation under a 30 for price to earnings and a 1.48 peg with all lines of business, guys, all lines of business powering forward, big free cash flow gains, big margin gains on the table for Amazon as they get more efficient with their robotics divisions and things of that nature into the next few years. Not too many people talk about that aspect of Amazon, but the free cash flow gains and the net income gains are probably going to be substantial over the next few years for Amazon, which is why I've built up such a very large position. It's my largest position by far moving into the next few years. Moving on to Google, especially, well, in relation to my big tech plays, right? So Google down about 1% today, but Google, right? Very, very bullish trend right now. Higher lows are down here, 310. Just looking for a higher low for possible further trend continuation. Nothing bad here on Google other than the fact that, it's weekly overbought, it's monthly overbought. You can clearly tell, right? It's extended on all time frames. It doesn't mean that it's still not one of my favorite companies in the market. It's just if we're looking to build positions here with size, it's kind of rough, right? I'm holding all of my long-term shares, but when you try to build with size at the top end of the valuation, I'm not saying it can't go further. Of course, it can always go further, but what's the risk to reward, right? I'm not saying Google's going to do this, yeah? But it's just the risk reward isn't so attractive overall. It doesn't mean that you can't have huge conviction in it. It just means that starting positions up here, especially for call options and things of that nature, it's a little bit dubious. Let's just put it that way, yeah? But Google's still a very strong company with very strong earnings. I think they're going to crush it this year overall, and I'm not selling a single share. It's just at the top end of the valuation range and so extended on so many time frames, right? That doing trades on this one, short-term swing trades, is definitely not as attractive as when we did it on the channel back here. We took profit on most of these gains so far, very happy, but now we're reallocating those gains into other companies that have been low, such as this one right here. Meta up 0.86% today, but let's be honest, just a drop in the bucket, right? Daily downtrend below our 645 down to 630 area of resistance. Not a big one. It's the closest one that you have though, right? It was support for a while, a little bit of price action there, a little bit of price action there, and now we're kind of under. So if we do fall a little bit further here, guys, you're clearly going to 600 down to about 560 support, which is the big boy area, right? That's the actual very large location. It is still, unfortunately, now a new weekly downtrend, right? They tried their best to break it and go to the upside. didn't happen. So unfortunately, still in long form monthly consolidation, maybe just going back down here into support, right? Very nice area to be building some positions on Meta though. Under 630, it's a low forward 20 multiple and a 1.63 peg with a decent forward price of sales and free cash flow yield. It's just that on the earnings call, Mark Zuckerberg is going to have to talk a little bit about the expenses, the CapEx that they're doing, and the new cloud business that they're exploring getting into soon, right? Moving into Microsoft right now. Microsoft down 0.59%. They were up higher this morning and gave it all back. So Microsoft is clearly going to one location, right? Daily downtrend, heavy momentum, oversold conditions on Microsoft. That doesn't happen too often, guys. Daily oversold on Microsoft, you can kind of count on one hand how many times it's done that over the course of the past few years. And every time it comes down there, you look for confluence, right? If it gets daily oversold in the middle of nowhere, like here was in the middle of nowhere, yeah? Daily oversold, middle of nowhere. There's nothing here, right? Now, that being said, and then you look for the back test and you say, oh, well, you know, there's big resistance here. Unless they get through it, we can't really reposition for some longs. I'm not going to position long here into big resistance. No, I'll wait for them to claim it, sit on it, and then we can maybe explore going for some swing trade longs. But now you got the breakdown. Daily oversold again. So now daily oversold into where? Into a huge area, right? 450 down to 430, huge area of back test here. Weekly remains in a downtrend, sadly, and the monthly remains in a consolidation phase. Between the 12 and 26 EMAs on the weekly, guys, you got daily oversold conditions, you got previous resistance, which is current support, and you're between the 12 and 26 EMAs. Go back in time and see, whenever Microsoft does this, well, this is a bear market. In the context of a bull market with great earnings, when Microsoft does this, yeah, is it a good buying proposition? Usually, yes. So right here, under 460, it's under a 30 forward price to earnings. It's under a 1.6 peg now because we did that at 470. Now it's 455 and a decent free cash flow yield. This is the area that I've been waiting for a while to build positions on Amazon, either leap call options or shares for my long-term portfolio. I've been buying again, right? You guys remember I wasn't doing anything up here, but 470, the 12 through the 26, this is my pocket. This is the pocket that I love operating in for some of these big tech names overall, especially when there's nice confluence, so pay attention to that. Moving on to Netflix right now. Netflix continues to go down. Netflix additionally was higher this morning and then did the good old Netflix thing. Yesterday, higher and then down. The day before that, higher open and then down. Today, higher open and then down. So clearly continued selling because of the good old Warner Brothers Discovery deal, right? It's so funny. Netflix has destroyed their share price in quest of acquiring Warner Brothers Discovery, but so has Paramount. Paramount has also destroyed their share price in quest of acquiring this business, right? I think everybody in Netflix right now is just tired of this deal news. They just want it to get through, or maybe they just want both companies to say, you know what, we're just going to, maybe Netflix shareholders just want to say, you know what, just pass on the WBD deal, right? Just pass on it. Just give it to Paramount. You guys are paying too much money. I think it's still accretive to the business and I can stick through this one with all the noise, but I know it's not easy when you have a very noisy trade like this. That being said, coming into the last area of support, 86 down about 82, probably final resting place for Netflix. Weekly oversold, that doesn't happen too often at all. Last time, as a matter of fact, was the big, great bear market sell-off of 2022. And prior to that, you don't really have many locations. I mean, 2011, that it was this weekly oversold. So big weekly oversold, monthly, cracking below the 26. That very rarely happens. And when it does, and you have weekly oversold, it usually has been a good buying opportunity for Netflix. I know it doesn't look like that right now, but you got to focus on this, right? Under 90, forward PE, manageable, PEG ratio, very manageable, 1.39. And their revenues and their earnings and their profitability are not at question here, right? It's just a very noisy trade. So this is one that you're going to have to just buy. It's tough to build swing trade longs, especially without recaptures of the short-term timeframes and an uptrend. So swing trade longs, not so much. But longer term positions, yes. Moving on to NVIDIA right now. NVIDIA up 2.13%. They were up 3.5%, but unfortunately weren't able to close near the highs. But we are still going. They're trying to go for the expansion trade right here. We're kind of sitting on support still. 185 down about 178. Resistance, resistance, support, right? Support, resistance, support again. You guys know the drill, right? Weekly, they're trying to go for the weekly trend expansion right here, but still just unable to break out, right? Monthly has been in the same location, guys. I mean, look, it's just accumulation, right? Same location for like 6 months, in spite of NVIDIA raising guidance, right? In spite of NVIDIA having two beautiful back-to-back conferences, most recently CES in Las Vegas, Then they had the other one back here in October that blew everybody's faces off. NVIDIA is doing very good things. It's just the stock price is not, right? That being said, around 175, 180, low 20s forward PE, a one peg, very attractive for NVIDIA, especially if you're looking to build some accumulation and for some expansion into the 200s. I think NVIDIA fair value is probably sitting closer to 250 at this point. So maybe just more monthly consolidation into the breakout. I think the breakout might just come probably after big tech earnings or closer to NVIDIA's earnings itself. Moving on to Tesla right now. Tesla down a little bit, but Tesla doing great things in the background. That being said, rejection from resistance again, 461 down to 445. And now maybe looking to re-explore this lower support, 430 down about 415. Even Tesla, right? Not much. There's been some lows, there's been some highs, but still at the same price. Accumulation zone. Yeah, you see it best on the higher term timeframes, trying to establish weekly higher lows, maybe go for the breakout. And on the monthly, this is just monthly sideways consolidation, right? Beautiful monthly uptrend, sideways consolidation, and moving higher. Lithium factory, huge for them, but it's all for one single purpose, right? It's for their longer term positives. Well, lithium, not so much for FSD, but the batteries that go under the cars, yes. But the long-term positives is the case for Tesla, right? Nobody's investing in Tesla for the car business anymore. At least I assume not, right? People are investing for long-term FSD, robotics through Optimus, and the massive energy business as well, right? And their services businesses as well, and their royalties that they can generate, et cetera, et cetera. So those could also be very large opportunities for this business. So keep that in mind. I have no swing trade positions on Tesla right now, but I do still have a number of shares that I'm carrying into the future. Moving on to Palantir right now. Palantir also doing a whole lot of nothing. The gulag, as we've called it, right? There's been some ups, there's been some downs, but overall, most of the price action has been in this location between 185 and 170. It's not that Palantir is not good, but it's people are finally waking up to the fact that, yeah, the valuation is a little bit high, right? Eventually, you just run out of buyers for a certain point in time. Like everybody now knows about Palantir. So who's going to buy Palantir, right? That doesn't mean that the price won't go up, but will it go up as violently as the past 2 years? Probably not. Will they keep posting insane earnings every time? Probably so, right? So Palantir just doing a whole bunch of nothing right now. We'll see what happens, but you're looking for a breakout either way of 195 or 167 to the downside. If you break down, you're looking for maybe some entries around the 150 location for some short puts, or possibly around this infamous 12 EMA, which is an area that I love buying at, cooling off the monthly timeframes. Palantir, nothing bad to say about the business. I'm still holding some shares of Palantir. Would I be adding up here? No, unless I'm new to the stock and I want to participate and I have a 5+ year time horizon, right? But for anybody who has a cost basis down here, it's kind of tough to justify the additional incremental buys up here, right? Moving on to SOFI right now. SOFI down 0.86%. Also, SOFI just trapped, right? So key area down here, 25.94. Let's call it 26. Breakthrough 26, daily downtrend into where? Just into the lower area of support down here, 25 down to about 22, which is your previous highs from 2021. Just sideways accumulation, not much action, right? Support below and then resistance above 30 to 28. So you really want to see SOFI get going, you're going to need the breakout retest, yeah. Other than that, it's just sideways accumulation. But notice I say accumulation. So it's a good area to be building some positions, either for selling some put options down here, which we've been doing a lot of in our Discord, and also just maybe accumulating some shares if you're bullish on the company. Leaps, dare I say, with long durations, right? Not super out of the money leaps, but, a little bit of leaps maybe on SOFI at 27, not too bad, 1.1 peg and a 7.34 price to sales. Moving on to Uber right now, down about 0.32. Uber, daily uptrend, obviously looking for the higher low. We'll see if they actually get it and can actually make a second attempt at the great wall of resistance above us, 91 to about 87.5. Big previous resistance, guys, clear, right? Weekly downtrend. So they're doing a good job here of trying to reverse the small time frames, yeah? But you need a little bit more of a push here in a resistance. Get me some better space, okay? Or just give me a higher low and try to reset it that way, right? But the one thing's for sure, if we do move down there, this is an area that I enjoy selling puts and an area that I would not mind accumulating more shares if I were interested. Lower 20s in terms of forward price earnings, 1.43 peg and a 5.25 free cash flow yield. And lastly, TSM, which we've already covered early on today's video, but just to reiterate the price action, right? Beautiful daily uptrend. Higher lows are here. So if they pull something like they did last quarter, rally and then decline, just understand, guys, the higher time frames make the most amount of sense for TSM. If you get a back test down here, 310 to 300, decent location to be maybe building some positions for some longs. And on the monthly, that would just be also just a little bit of healthy monthly consolidation. It's somewhat extended right now on the monthly timeframes. Beautiful fundamentals, though. Beautiful fundamentals. It's just starting a position here. It's kind of the same thing as, well, it's not quite the same thing as Google, but arguably, right? The risk to reward is not so much in your favor, right? If you just want to blind buy this one, I mean, it's up to you, right? But I'm a bigger fan of maybe waiting for some healthier pullbacks into some key levels. So maybe we can build some swing trades from there and have better entries in terms of risk to reward purposes. Yeah. So that's everything I had for today's overall big tech rundown. Hopefully you guys enjoyed. Now let's spend 5-10 minutes talking about the biggest gainers and losers of the day. All right, so biggest losers of the day and gainers of the day. We've talked about the themes surrounding these plays all throughout the week. Now let's tackle some individual names and get my thoughts on the matter. So Circle is actually a position that I have. I started building position here around the whole, let's call it 130, 120 range, and I added a little bit more down here. But Circle is a very long-term play, right? The expansion of these stablecoin networks and the fees generated from these networks is a multi-year thesis. Just to give you guys some context, I have like $4,000 in Circle total. I'm down on the position, but keep in mind, like I have 7 figures, right? So $4,000 is not that much, but I do have it as part of a multi-year thesis expansion trade. It is trading quite cheap in relation to their forward projections in terms of the expansion of their overall network at about $18 billion. I think the USDC stablecoin network now is up to $70 billion. So a little bit undervalued, but again, they're dealing with the whole IPO sell-off, insider lockup periods, et cetera, et cetera, et cetera, but decent. But you shouldn't be expecting any returns very quickly on this play if you are even interested at all, right? It's kind of like a lottery side bet for me, nothing with size. Moving on to Reddit right now, Reddit down like 9.36%. This one was an Australia social media ban. I didn't believe that they were actually going to do this. This was like proposed like a couple months ago. I didn't believe they were actually going to do it. Turns out they actually did do it. So that being said, Reddit had a tremendous tumble on that piece of news right there. 221 down at 200 support. If you guys enjoy Reddit, we covered it after their most recent earnings, and we will cover it again in terms of their earnings coming up. At 214, right, slightly lower than here, the multiples are decent in terms of the forward peg, but keep in mind this EPS growth rate will not last forever. That'll be coming down. So whenever that's the case, you got to take the peg with a grain of salt. Yeah. Price to sales is a bit more accurate, and it's a little bit high. If you want to know best price for me on Reddit, if I can somehow find 185, tested the 12 EMA right here, it gives me a little bit more margin of safety on this price to sales figure. And then it makes a little bit more sense for me, which is exactly what we said after their earnings when they had it, last time they came down here around the 180 range. That's best for me. If you guys want to make an attempt here in a support, feel free, be my guest. But for me, best for Reddit is down here at mid 180s. Talking about maybe something like a Robinhood. Robinhood came down tremendously today because they're just closely associated with the news in crypto overall. We talked about it, the Clarity Act, et cetera, et cetera, et cetera. You know, Hood being closely attributed to crypto, you can see here from the October 10th sell-off in crypto, Hood just hasn't been the same, right? So it goes both ways. It's a double-edged sword. When crypto does really well, Robinhood gets the lift. When crypto does really poorly, well, Robinhood kind of gets dragged down with the mix. It doesn't mean that the other aspects of their business aren't doing well, such as equities, options, futures, prediction markets, all that good stuff, and their subscriber growth and assets under management, and that we know is very good, right? However, is it a buy right here? Yeah, starting to become a buy area around the $100 range if you wanted to add to the position. Decent back to the 12, solid support down there, and it's these guys right there, yeah? And a much more manageable valuation, right? Around 110, it drops under a 2 peg. Price to sales is still very high though, guys, very high. So this is like an incremental location. I can't fathomably go full size here, but could it be interesting to maybe sell a put option or two, or build some small swing trade positions from here? Possibly, yes, right? But don't expect to have as much gains as people who bought back here. We've said this many times, guys, right? The gains that people had from here and the velocity of those gains are probably not going to happen again, right? Because it's the law of large numbers. It's already a $100 billion market cap company with only like $4, $5, $6 billion in revenue. So, you got to let it catch up a little bit right there. Coinbase is a stock that I never really play, to be quite honest with you. I'll just kind of skip over this one. I much prefer the broader based brokerages, such as Robinhood or things of that nature, right? I'm not going to play Coinbase. There's nothing wrong with playing it, but it's just not my favorite. I'd rather play broad-based brokerages or the banks or crypto itself as opposed to playing a crypto broker because the inflows and outflows fluctuate so much with crypto. You know what I mean? Moving on, T Energy is my small cap solar play. So T Energy, it looks like it's getting a little bit tired here at the top, the Great Wall of Resistance from the post-IPO period, right? And now if you get that little downswing here, decent position to re-add maybe 6 to 5 is the location. I might consider adding my position. Most of my position was built under 4, between 4 and 3, all the way down there. I would maybe add to it down there. Vertically integrated solar producer could be an interesting play. Speaking about Ondas maybe, because you guys want me to cover this one. Ondas maybe on the back test of 10 to 9, where the valuation makes a little bit more sense. Keep in mind, it is definitely an in favor play with a very solid narrative, right? Very solid narrative. Drones, essentially, right? $5 billion in market cap, though. You got to be careful of valuation sometimes. Valuation does matter. I know a lot of people don't want to feel that way, but it does matter, right? They're trading at 15 times 2028 sales right now. So eventually you're going to need the revenues to catch up to this number right there, but maybe a back test here, technical back test of maybe 10 could be a re-entry location. It's going to be rich. Even down there, it's going to be very rich. Last time we said Ondas was a screaming buy on the channel was back here when we participate a bit more heavily in it, kind of like 6 to 8. 10 is not terrible. 15 is not the best though. Okay, but 10 upon reentry, pay attention to it. You might get an opportunity there. Grab came down after there was some news about the Indonesian government cracking down on Grab, saying that they would have to charge less in terms of commissions and provide insurance to their drivers. So unfortunately, Grab now has kind of lost the breakout pattern. They're now back into the gulag of consolidation. So lower here, 4.5. I'm still a fan of Grab. I am building a position on Grab. Okay, so I bought it a few times below 5 and around 5 is where I've been accumulating. So I'm not really up right now on Grab. I'm overall down on the position, but this one the same. I have about $9,000 right now in Grab overall. It's a small position for me. Definitely not super large size, but it is something that I'm willing to hold over the next few years, as the thesis for expansion of the business is quite good. They're moving into profitability right now, just like Uber did. The analyst price targets are all clearly above the stock right now. EPS flipped to positive. Revenue, very nice revenue scale. And if you've ever been to Southeast Asia or across Asia, you know about Grab, right? They have a dominant market share out there. So I think it's interesting as an emerging markets play, right? I only really have a few emerging markets plays. This one, Mercado Libre, and sometimes I also play Nubank, right? But yeah, so I am building further position in Grab overall, but this one, again, don't expect anything soon because they've lost the trend, they've lost the momentum. So you're basically just waiting for the fundamentals to expand overall, but an interesting play nevertheless, right? Credo, we can talk about Credo. Credo upon a further back test down here, 135 to 120, I think is a very easy buy. 12 EMA, massive, massive, massive EPS and revenue growth rates overall, and not trading super rich, right? 1.25 peg down there. Sorry, I don't have a price. We did that price when it was in the mid 130s when I built a bit of a swing trade position here. So if it does revisit there, interesting, but there's a few of those, right? This one, ANET, also you can make an argument down here. A-Lab, also you can make a lot of, I know these are not the same companies, but they kind of have the same setups, right? They've come down a lot, consolidation around a price range and close to the 12 EMAs. So just pay attention to that whole segment of the market overall. I think it can be still quite interesting. Talking about the connectivity plays for all the data centers, whether it's networking components, cables, even things like, Vertiv solutions for liquid cooling, like they all look the same, right? It's just, they had a big drawdown and now they're into a consolidation range. So these could be a some nice trades to possibly play some of the data centers as well. I think that's kind of it for the ones that I wanted to. Oh, we could talk about Zeta as well, because some of you guys want me to talk about Zeta. Zeta for me is a buy right now. Indeed, a very nice buy. 20 down about, let's call it the pocket of 18. It's an accumulation range. So they try to go for the breakout. I mean, it's a big, once you see it, you can't really unsee it, right? And then you also have the breakout here out of the support range. So once again, lower 20s down here, like 19, 18 pocket is an area that I'm accumulating more Zeta shares. I do think this company is undervalued. It is in a monthly uptrend right now, and their forward growth is very attractive, guys. They're talking about a company that is flipping to profitability, right? Nice EPS ramp right here and a nice revenue ramp. They're flipping from negative to positive net margins as well. See, net margins now positive, almost barely positive net margins as they continue to scale. Price to sales, because we can't really do EPS, right? Well, we can, but it's not the best coming off of 0. Price to sales would be the best metric. And keep in mind, 1.7 billion in sales and $5.3 billion market cap. It's like a 3 price to sales. It's not that expensive for the amount of growth that they have in the near-term future, and the monthly MACD also crossing as well. So you may need to be a little bit more patient for the breakout everybody's looking for, right? But definitely a very solid company. Nevertheless, if you're looking for something in the mid-cap range, $2 to $10 billion type of stuff, right? Now we can talk about some of the names that are on the upside here. Talking about Fluence. Fluence is a position that I've been building here over the course of the past month or so. Haven't bought any recently. Most of my buys were down here in the lower $20 range. Very solid, guys. It is just a battery storage play. It is a $4.6 billion company right now. And take a look at the revenue pipeline, right? The revenue pipeline is very, very solid right here. Very solid for 2026, 3.5 almost. 27, 4 billion, right? So price to sales is very attractive for this company, although a little bit choppy on EPS. EPS will be flipping positive. And if you don't know what they do, well, I'll just show you what they do essentially, right? So you could just type in this, Meta in Arizona. They posted something recently, yeah. So this is Meta's new cluster. It's 300 megawatts of solar with a 1200 megawatt hour battery storage system, okay? And what you're looking at right here is the battery storage system. And who does that? Well, this is Fluence. So there's two plays that people talk about. Fluence, which is lithium ion batteries for storage. That is short-term storage purposes, 1 to 5 hours roughly. And then there's this other one, which is the new kid on the block, which is zinc, as opposed to traditional lithium ion. This one has a longer duration of storage, can extend beyond lithium ion, and a little bit less of a fire risk as well, which allows them to put them inside as opposed to outside. A few differences here and there, but you know, these two plays, pay special attention to them, EOSC and FLNC. I'm personally in FLNC. EOSC is an interesting play moving forward. They also have a big pipeline of backlog too, so pay attention to those battery plays. It goes in relation to our whole energy build out essentially for these data centers, right? We could talk about maybe Vistra. Well, we talked about Vistra earlier in the utility segment of the market overall. The rocket plays very extended, guys. I'll say it once, I'll say it 1,000 times, right? These were buys when we backtested these 12 EMAs. Up here, you're stretching it, man. You're really stretching it, right? Because these companies, they don't have the revenues to support these valuations just yet, you know? So you got to be very careful where you buy these. The ASTS is a $37 billion company with revenues of $2 billion in 2028. I'm not saying they don't have good tech, and I'm not saying space is not promising, but there becomes a point where you kind of got to ask yourself, like, am I getting good risk to reward on these trades? And the answer, quite frankly, for Rocket Lab and ASTS is no. If I'm in them from way down here, am I selling them? No, because I have a great cost basis and I have conviction. But starting a position up here on Rocket Lab or ASTS, it's just not my style to chase things like that when the forward revenues are so far away. I'd rather just wait for a pullback in the markets. You know, when we have a pullback in the markets, these things drop like 35, 40%. Maybe then you can get a better entry point, right? So pay attention to that one on the watch list in the future. And I think that's it. A lot of the, you know, a lot of these plays, the Applied Materials of the world, LRCX, all that stuff was up with TSM's earnings, obviously ASML. ASML, it's not a buy up here for me anymore. Eventually, you do have to draw the line, and I draw the line at $1,200, $1,300. I was panning the table all of last year to buy this. If you guys got it, great, but there's times to buy these and there's times to not buy these. Now is arguably the time where it's getting into richly valued territory, right? When you buy up here, you're just not getting the best compound annual growth rates, right? It's a hold. All of these are holds for me right now. The same thing for SanDisk, right? I know memory, SanDisk, and Micron, but they're currently holds for me right now. Starting positions up here is arguably a very greedy trade. It doesn't mean that it's not going to work. It just means it's very greedy. Some of you guys don't mind. Some of you guys will just play the momentum, and that's fine. But you've got to understand when you get into them, right, that pullbacks can be very sharp and very steep when things start trading fairly rich. And I think that's overall what I wanted to cover today. We'll try to do more in tomorrow's video, which I might film on Saturday, because I do believe I might head out to a dinner tomorrow night. So, but I think that's most of what I wanted to cover, because we covered most of all the other themes throughout the rest of the week, right? So we'll be covering more names tomorrow, depending on tomorrow's price action, or rather Saturday when I film it. But that's everything I had for you guys today, man. So hopefully you guys enjoyed today's video. If you did, consider dropping a like. Would appreciate it for the growth of the channel. Since these videos are very long, the YouTube algorithm probably doesn't promote them that much. So I need your guys' help. Try and like the video for me. Try and subscribe to the channel as well if you like this style of content. And last but not least, try to engage with me in the comments section. If you just want to say thanks, or if you want to leave some feedback, or if you want to talk about a play that you're in or something like that, try and engage with the videos. It really helps me out, since I do post very long form content. It's always tough. I know that the YouTube algorithm would favor 15, 20-minute videos, but I just find that there's a lack of context when I keep them so short. And I know there's a niche of viewers out there that enjoy this long form style content where I explain more things, I go through more trade styles, more of the thought process behind everything like that, right? So that's it for me today, guys. Hopefully you enjoyed. I'll see you guys Saturday for the Friday and weekly market recap. Take care. Always a pleasure. Have a great end of the week. That's it for me. Peace.